So good morning. Today we will be covering the topic of input tax credit. Okay. So input tax credit, it is covered under section 16, section 17 and section 18. The most important factors you need to remember with respect to input tax credit is what are the conditions to be satisfied to avail the credit and your blocked credit. What is the credit that is blocked? So conditions to be satisfied for availing credit. The person is entitled for ITC if he is a registered person. The goods or services are supplied to him, are intended or used in course or in furtherance of business. He satisfies certain other conditions, prescribed conditions, and claims ITC in the manner specified under section 49. So two conditions, registered person. So an unregistered person cannot take ITC. Only a registered person for the supply that is received in course or in furtherance of business. Inward supply in course or in furtherance of business. So first these two conditions to be satisfied. Once these two conditions are satisfied, the person is eligible to take ITC. But he cannot take all ITCs, or like for all inward supply, they cannot take input tax credit. Certain condition, he satisfies certain prescribed conditions. Now this is the most important thing from the exam point of view. What are the prescribed conditions to be satisfied? You will be given case studies where you will have to apply the conditions and see if that particular scenario, it covers all the, or it satisfies all the conditions. So first one, possess tax invoice. First condition is possessing invoice or any other document, invoice, debit note, or any other document that is provided by the supplier. Okay, so I'll just stick to invoice, possessing invoice or debit note. Second condition, the details of this invoice or debit note is furnished by the supplier in the statement of outward supplies, and such details have been communicated to the recipient of the invoice in the manner specified under section 37. So that is, supplier files GSTR1, okay, and supply is reflected in GSTR 2B of the recipient. Supply reflected in 2B. Of recipient. Okay, so there is an invoice. The invoice is declared in the outward supply statement of the supplier. When it is declared in GSTR 1, automatically it gets reflected in GSTR 2B of the recipient. The recipient can take credit only if it is available in GSTR 2B. The credit that is limited. So if I have taken, I have made certain purchases for about 100 rupees, okay, but only 80 rupees is there in my GSTR 2B. That is, the person from whom I purchased the goods, he filed the return. While he filing the return, he has mentioned that the price is 80 rupees and accordingly GST on 80 rupees is calculated. So in my 2B, I have purchases of only 80 rupees and accordingly I will be eligible to take ITC only on the GST component in this 80 rupees purchase, even though my invoice is for 100. Okay, so there has to be an invoice. This particular invoice, if it is 100, the 100 rupees has to be declared by the supplier in GSTR1 and it should be reflected in GSTR2B of the recipient. So the entire process should be completed. Goods or services have been received. So invoice should be there. Invoice should be filed in GSTR1, reflected in GSTR2B. Goods or services should be received by the recipient. So received by the recipient in case of the goods being supplied in lots. Only when the last lot is received, ITC can be availed. So if I have an invoice for 10,000 units of a product and I am being supplied 1,000 units every month, even though I have the invoice for 10,000 and it is there, it is declared in the GSTR1, it is available in GSTR2B, I cannot take the credit for entire 10,000 units in the first month itself because I am receiving the goods in lots. So only when the last lot is received, that is the point when ITC can be availed. Okay, there is no ITC on advance payment with respect to goods. Then, so goods and services is to be received. Filing of GSTR 3B by the recipient. So the recipient, how can you avail the credit? You can avail the credit only in GSTR 3B. So if the recipient does not file GSTR 3B, they will not be able to avail the credit. So to avail credit, you have to file GSTR 3B. Okay, so the supplier has to file GSTR 3B. It will be reflected in GSTR 2B and it will be availed in 3B, GSTR 3B. So these three returns, one from supplier's point, two from the recipient's point is required. Goods should be received and they should possess a valid invoice or debit note. So these are the major conditions that has to be satisfied. If these conditions are satisfied, then ITC can be availed. ITC has to be availed within the 30th November of the next financial year or date of filing annual return, whichever is earlier. The due date of filing annual return is 31st December. So anytime 30th November or the date of filing annual return. So if you are filing annual return before 30th November, then after filing annual return, you cannot take credit. So 30th November of the upcoming financial year or date of filing annual return, whichever is earlier, is the due date or the maximum time within which ITC can be availed. So there is no specification that June month's ITC I have to avail in the month of July. June month ITC you can avail within 30th November of the next financial year. There are certain restrictions on availment of ITC. Okay, so if ITC is availed based on self-assessment, so we have to be our own judge. We have to assess the ITC that is eligible for us, and then we have to avail it in GSTR 3B. So I have availed a credit of 100 rupees in GSTR 3B. Okay, but then I came to know that the supplier has not paid the taxes to the government. Okay, that is also a condition to be satisfied. Supplier should have deposited the tax to government. The supplier has filed GSTR1, but he did not file GSTR3B. GSTR1 is a statement of declaring your outward supplies. You are not paying tax in that. Tax payment happens while filing GSTR3B. So the supplier filed GSTR 1, it is available in our GSTR 2B, and accordingly we have filed the return in 3B availing the ITC. Okay, then we come to know that the 3B is not filed by the supplier, and accordingly the tax that has been collected by him from us has not been deposited to government. So now, because the amount is still not received by government, I cannot take the credit of something that is not still received by the government. So in such situation, we'll have to reverse the ITC that we have taken in our GSTR 3B in the upcoming return, along with interest for that particular time period for which credit has been taken. Okay, so if the supplier has not paid, then later on you will have to reverse the credit. Next scenario is where you don't pay the supplier. So I have purchased goods for 100 rupees. Okay, I have received the goods. It has been reflected in my GSTR 2B. I have availed the credit, and the supplier has also been very genuine. He has also filed his GSTR 3B and deposited the amount with the government. All conditions are satisfied. But I did not pay the supplier. We have time till 180 days. 180 days to make payment to supplier. 180 days. Within 180 days, the supplier should be paid. If the recipient is not paying the supplier within 180 days, the credit that has been availed by the supplier needs to be reversed on the 180th day. Because there should be a good trade practice. And we cannot just not pay the supplier and avail the credit also. So we are putting the burden on the supplier. He is depositing the money with government, but he has still not received the money. He has to collect and deposit. That is the process. So to collect, you have not paid him. Right? So 180 days, within 180 days, the credit has to be, the payment has to be made. If payment is not made to the supplier within 180 days, the credit should be reversed. The reverse credit can be taken at any point of time. There is no time limit. Okay, time limit is only for first time availment. For availing a credit for the first time, declaring it in GSTR 3B, the time limit is up till 30th November. But once we have availed, once we have declared it in our GSTR 3B and later on we have reversed it because the supplier did not pay the tax or because the recipient did not pay the supplier, because of these reasons, if we have reversed the credit, there is no threshold limit. We can re-avail the credit at any point of time, even after 30th November. Okay, that is one point to remember here. Then bill to ship to address. So this receipt of goods can be a actual receipt of goods or a deemed receipt of goods in case of bill to ship to address. When it is bill to and ship to, so once the product has been received to the in the ship to address, it is deemed that the goods have been received, and the person who is paying the consideration, they can take the credit. Okay, what are the documents that can be used for availing ITC? We can use invoice, debit notes, bill of entry in case of input service distributor and input service distributor, credit note or invoice. So any specific document that is declaring the information about the goods that has been purchased, about the ITC, and it has the GST number, it has date, invoice number, or document number, that can be regarded as a valid document for availing ITC. So reversal of credit in case of non-payment of consideration. So we have discussed this. It is non-payment of consideration being 180 days. Okay, that is with respect to section 16. So again, summarizing, In order to avail input tax credit, you should possess an invoice, you should have received goods and services, tax to be paid to government, GSTR1 to be filed by the supplier, reflected in 2B and availed in GSTR 3B. Okay, and time limit is 30th November of the next financial year or the date of filing annual return, whichever is earlier. Now we come to section 17, that is apportionment of credit. Okay, so when a particular purchase is used for both business and personal use, we can take credit only registered person and the particular goods or services are used in course or in furtherance of business. So if it is used for personal purpose, you cannot take credit. So if in case of a particular laptop, for example, laptop you are using for personal purpose and for official purpose, for business purpose, we are supposed to take proportionate credit. Okay, where it is used for both purposes, you need to take proportionate credit only with respect to the turnover, considering the turnover and the value of the goods. If it is used for exempt supply, again, for exempt supply, nil rated supply, credit is not available. You cannot take input tax credit because your outward supply is exempt. So you need to reverse the ITC. So if I am manufacturing one product which is exempt and one product that is taxable, the repairs of the factory, repairs and maintenance. Repairs and maintenance cost of the factory premise is being used for manufacture of both the exempt product as well as the taxable product. So the repairs cost has to be allocated between the exempt product and the taxable product, and only the proportionate expense or the proportionate ITC I have to take credit. Proportional, how it is defined based on the turnover. So we identify what is the turnover, and if the turnover is 50-50, 50% credit can be taken, 50% credit has to be reversed. If it is 70-30, then 70% credit can be taken, 30% credit to be reversed. So how it has to be calculated? We have to first take the total turnover. When you are taking total turnover, taxable supply, export, exempt, inward supplies liable for reverse charge. So inward supplies, we don't add it in our turnover in anywhere except for calculation of credit reversal. Okay, so when you're calculating the proportion of credit reversal, because for reverse charge also we can take credit. Even though it is an inward supply, we are paying tax and taking credit. So that should also be added in the turnover. So total turnover on which this is the total value of supply, 20 lakhs. Okay, now out of 20 lakhs, identify the turnover for which ITC has to be reversed. ITC has to be reversed for exempt supplies. Okay, inward supplies we are taking into calculation only for total supply calculation. We don't take it for the reversal, the first part. Okay, so exempt supply needs to be the ITC for exempt supply needs to be reversed. So for what you can take credit for these two. So that is 15 lakhs taxable and export. Export and zero rated, that is zero rated supplies. What are zero rated supplies? Export and SEZ supplies. Zero rated supplies, even though tax is not payable on the outward supply, you can take credit on the inward supply. Okay, so that is in case of zero rated supply. So where can ITC be taken? ITC can be taken for taxable supplies and zero rated supplies. ITC cannot be taken, or ITC has to be reversed with respect to exempt supplies or when a particular supply is used for business and personal use. Okay, so we need to calculate the proportion, and proportionate credit can be taken. So what is your taxable supply plus zero rated supply by total supply into the ITC will give you the proportionate credit. Okay, taxable plus zero rated supply by total supply into ITC. Okay, this will give us the proportionate credit that can be availed. The balance amount needs to be reversed. Next, we come to blocked credit. Block credit section 17(5). Block credit with respect to transportation of passengers in a motor vehicle having a seating capacity of less than 13 persons. Okay, it is blocked unless, so the credit for a motor vehicle, so if I am purchasing a car for business purpose, the credit is blocked because the seating capacity is less than 13%. When is credit allowed? Only in three conditions. Where it is used in further supply of motor vehicle. If I am a car dealer, then I am buying the cars for selling the car. Correct? Further supply of motor vehicle. So credit is allowed. For transportation of passengers, if I am using it as a taxi, then credit is allowed. For imparting training, if I am using the car for my driving school, then credit is allowed. For transportation of goods, credit is allowed. Okay, only these four conditions, these four cases, credit is allowed. Further supply, transportation of passengers, and imparting training. So, if credit is denied for a particular motor vehicle, then credit is also denied for their insurance, repairs, all the ancillary incidental services relating to the motor vehicle for which GST will be charged by the supplier. That credit is also blocked. Okay. With respect to vessels and aircraft, again, same concept. Motor vehicles, there is a limit. Passenger limit is there, 13 passengers, including 13 persons, including driver, that is 12 passengers plus one driver. In case of vessels and aircraft, no threshold limit is there. Okay, exemption is respect to further supply, transportation of passengers, imparting training, and for navigating vessels or imparting training for flying, for transportation of goods. Okay, other than this, if it is purchased for any other purpose, the credit is blocked. The idea of blocked credit is that when a particular goods or service is used for personal purpose, we should not transfer the liability of credit to somebody else. For example, a motor car, if a business is having a motor car or it is having a fleet of cars to provide transportation facility to the employees. Okay. So who is actually consuming the service of provided by the car or the cost of the car? Who's consuming it? It is being consumed by the company. Now, this cannot be pushed on to the ultimate consumer. You cannot push on this cost to the ultimate consumer, that I am using this in furtherance of business. So we can transfer it to the consumer. The idea is only those expenses and those costs which goes into the product, which goes into the manufacture of product, which goes into the providing the service, that should only enter into the product cost. And hence, these credits are blocked because ultimately the consumption happens at that point by the person who is availing these services. So I'll give you this example, food. Next. Okay, this is first one is with respect to transport. The second one is food, beverage, outdoor catering, beauty treatment, health service, cosmetic, plastic surgeries. Okay, all this, as long as this is blocked. What is the exemption? When it is provided in the same category. Okay, when it is an inward supply that is used to provide the same outward supply. That is, a caterer is availing the services of another caterer. So there is a main caterer who has been appointed uh, for a wedding. Okay, he will outsource sweets, okay, to another caterer 2. So this sweets is being provided so the supplier is caterer 2 and the recipient is caterer 1. Okay, they are both in the same line of business. So if any services is provided to another person who is in the same line of business, ITC is allowed. Okay, now the caterer 1 will provide the service to assuming it is a registered person. ITC not allowed. Okay, a company is having an annual employee meet. So for the annual employee meet, food and beverages are being provided. So the caterer 1 is being appointed. Caterer 1 has outsourced sweets to caterer 2. So caterer 2 provides sweets to caterer 1 with an invoice. On the invoice, ITC can be availed by caterer 1 because they both are in same line of business. And then the caterer 1 gives a complete total consolidated invoice to the company. Company cannot avail ITC. Because ultimately, who is consuming the service? Who has consumed the service? The service has been consumed by the employees of the company. Now, you cannot charge this on the final consumer who is consuming the services of the company or who is buying the products manufactured by the company. Okay, so that is why these type of services, the credit is blocked. It is more like these services has been availed for personal consumption. Membership, health and fitness center, travel benefits extended to employees, works contract services, that is also blocked. Works contract services for construction of an immovable property. Why? Because immovable property is outside the purview of GST. So works contract service for construction of an immovable property, ITC is blocked. Okay, ITC can be availed if the works contract is provided for construction of plant and machinery. If it is used for construction of plant and machinery, excluding land building, telecommunication, pipeline. So any works contract service that is used for construction, ITC is blocked unless it is used for plant and machinery. And under plant and machinery also, pipeline, telecommunication towers, also the credit is blocked. Pipelines and telecommunication towers, this is very important. Please note this down. These three exemptions with respect to works contract. Then credit is blocked for a composition dealer, credit is blocked for a non-resident taxable person when goods are used for personal consumption, when goods are given off as gift, free sample, when the goods are stolen. As long as it is not used in furtherance of business, credit cannot be availed. So if it is given as gift, there is no consideration. ITC cannot be availed. When it is given by way of free samples, credit cannot be availed. When the goods are stolen, that means the goods are outside the business ambit. So credit cannot be availed. Next is availability of credit under special circumstances. Special circumstances when credit can be availed is whenever you are registering, whenever you are going for a GST registration. And once the GST registration is obtained from the date, if it is voluntary registration, from the date of grant of registration, for the stock that is held at the time of registration, you can claim the credit. With respect to compulsory registration, if the registration is taken within 30 days from the date you are liable to get registered, then credit will be availed on the stock that is lying in hand on the day immediately preceding the day the person was liable to pay tax or liable to be registered. Why you can take credit on the stock is once you get registered on the, you are going to sell this particular stock only. The stock that was lying as in your stores, that is what you are going to sell tomorrow. And when you are going to sell it, you are going to sell it with GST. So credit can be availed for the stock that is lying in the stores on the date when the registration was granted or on the date when you are liable to get registered if you apply for registration within 30 days. Then in case of capital goods, credit can be taken by after reducing 5% for every quarter or part thereof. So if I was liable to get registered in the month of September, okay, 1 year from September you can take. If I have purchased the capital good in the month of April to September, there are 2 quarters. So for 2 quarters, I have to reduce 5% of the value and 5% of the ITC accordingly. And then the balance credit can be availed in the month of September when I am getting myself registered, or when there is a change in the registration, when you are moving from composition scheme to a normal scheme, then also you can take credit. And for capital goods, it is reduced by 5% per quarter or part thereof. Okay. Reversal of credit. If you are moving from composition scheme, from regular scheme to composition scheme, if you are moving from a regular scheme to composition scheme, or your supply has become exempt, the outward supply or the product that you were selling earlier, it was taxable, now it is exempt. So when it is exempt, you cannot take credit. So you are supposed to reverse the credit. So you will have to reverse the credit with respect to stock that is lying in stores on the date of this particular change, and also with respect to capital goods. So with respect to capital goods, the reversal of ITC will be taken by considering the useful life to be 5 years. Okay, so you have to proportionately reverse the credit. If I have purchased a particular capital good in 2024, then I have, and the cost is 10,000. Now I have to reverse 10,000 into how many years has gone by? 1 year has gone by. So 1 by 5 I'll have to reverse, and the balance, 4 by 5 I'll have to reverse, because from 2025 my product is exempt. So for 1 year only I can avail the credit. The balance 4 years I have to reverse the credit. Then we have job worker. Job workers, you need to remember only 2 points. That is, in case of a job worker, when the principal sends the goods to the job worker to do certain job work on the product, ITC is available provided the goods are returned back within 1 year in case of input, 3 years in case of capital goods. Okay, that is the only condition that you need to remember with respect to job work. 1 year in case of inputs, 3 year in case of capital goods. Then order and utilization of ITC. How ITC needs to be utilized. Very important. It is important even in practical scenarios. It's very important to know the waterfall scheme in the adjustment of ITC. So ITC will be first used to set off IGST liability. After this, if there is any balance, you can use it to set off CGST or SGST liability in any proportion. I can do 50-50, 70-30, 100-0, any proportion we can do. Okay. IGST ITC should be made 0 before adjusting CGST or SGST ITC. So first you have to take this IGST ITC, use it against IGST liability, use it against CGST, use it against SGST. This particular box of IGST ITC should become 0. Once it is 0, you go to the next box, CGST ITC. CGST ITC, first you use it for CGST liability. If there is any balance, you can use it for IGST liability as well, after making CGST liability 0. Okay. Same with SGST. SGST ITC, first you can use it towards SGST liability, make that 0. Then if there is any excess ITC available, you can use it to set off your IGST liability if there is any liability left. CGST and SGST cannot be adjusted. CGST ITC cannot be adjusted against SGST liability and vice versa. Why CGST and SGST, they don't go together? Because one is state tax, one is central tax. Central tax liability cannot be paid using state ITC. They are two different entities. So cross matching is not allowed. Okay. So we will now discuss few sums. Nitin Limited, a registered person, is engaged in the business of sports equipment. It provides the following details of GST paid during October 24. Raw material purchased being used in furtherance of business. So raw material used in furtherance of business, we can avail the credit. Raw material purchased for personal use. It is not used in furtherance of business, so we cannot avail. Machinery purchased to be used for manufacturing process. Yes, you can avail the credit. Motor vehicle purchased for transportation of employees. If the motor vehicle seating capacity is greater than 13%, then credit is allowed. Like if it is a bus, credit is allowed. If it is a car, credit is blocked. So I would consider this is a motor vehicle. So it's a car. I will assume it is a car and hence the credit is blocked. I cannot take ITC. Insurance premium paid on the above. If the motor vehicles credit is blocked, then all the ancillary incidental expenses also credit is blocked. So we cannot take. Payment made to the contractor for construction of staff quarters. Staff quarters, construction of land, building, pipeline and telecommunication towers, credit is blocked. Okay. So credit is blocked in this case also. So this is how you will get questions. You should know what are the conditions to avail ITC, what are the conditions with respect to block credit. One more question. Goods purchased without invoice. Without invoice, credit cannot be taken because you need invoice. Invoice is a mandatory condition. Goods purchased. Full payment is made by Vinita Limited to Sagar Limited against the supply, but tax is not deposited to the government. So that is one of the conditions to be satisfied. Tax is to be deposited with the government. So when you are aware that the tax is not deposited, credit cannot be availed. Purchases of goods not used for business purpose. Again, credit cannot be availed. Purchase of goods from Rahul Limited. Invoice of Rahul Limited is received in the month of October 24, but goods were received in November 24. For which month are we computing ITC? We are computing ITC for October 24. So October 24 goods have not been received. Conditions to avail ITC: goods should have been received and hence ITC cannot be availed. Goods purchased against a valid invoice from Likshita Limited. Vinita has made payment to Likshita for the purchases in the month of November. So goods received in October, payment made in November. Okay, because payment needs to be made within 180 days only. We have 180 days to make the payment. If we are not making payment within 180 days only, we need to reverse the credit. So this credit can be taken. We'll see this also. ABC Limited. ABC Limited is a registered supplier engaged in manufacture of FMCG products. It has provided the following information pertaining to purchases made and services availed in the month of October 24. Packing machine, credit can be availed. Motorcycle for inputs. For transportation of inputs, credit cannot be availed. Motorcycle, motor cars. Okay, again, I will assume it's motor car. Then membership and health services, credit cannot be availed. Inputs purchased but lost before reaching the factory of ABC Limited, credit cannot be availed. Stolen goods, credit cannot be availed. Then we'll see illustration 27. Sitani, a registered supplier of goods, provides the following information. Interstate supply of goods and I think this should be intrastate then. Interstate supply of goods 15 lakhs, interstate supply of goods 10 lakh. Purchases made, interstate purchases 5 lakh and interstate purchase of goods 3 lakh. ITC is opening ITC is also given. You have been given the tax rates. Both the inward and outward supply are exclusive of tax. All the conditions necessary for availing the ITC is fulfilled. So we need to adjust the ITC. How to adjust the ITC? Okay, so second one is intrastate. This is intrastate. Okay, there's a mistake in the printing mistake in the working book. So for first interstate ITC, second. So for first part, interstate supply, ITC is, there is IGST. For intrastate supply, it is CGST and SGST. Now computation of ITC, opening balance, we need to plot it. Okay. And again for interstate supply, it will be IGST. For intrastate supply, it will be CGST, SGST. Now, first, I have 2,04,000 as IGST credit. So first what we should do, we have to adjust it against 1,80,000. Okay. So IGST liability is made 0. Now after making IGST liability a 0, what is the balance? There is 24,000 rupees left. So this 24,000 rupees can be adjusted with CGST, SGST equally. It can be adjusted in CGST completely. In any proportion, you can adjust. Okay. So we need to see what is the balance liability in CGST and SGST. If you see, there is 88,000 credit available in SGST. So I have more credit in SGST and I have, my liability is only 60,000. So I have enough credit to SGST credit to adjust against my SGST liability. So the entire 24,000 we can directly adjust against CGST liability. Okay. So your ITC of IGST ITC is made 0. I've adjusted 1,80,000 completely against IGST liability and the balance against CGST liability. Okay. Now next SGST first SGST liability, SGST credit. SGST credit should be first adjusted against SGST liability. My SGST credit is 88,000. I adjust it against 60,000 to balance will be carried forward. Balance 28,000 is being carried forward to the next year. CGST liability and first CGST ITC I will adjust against CGST credit. So what is the CGST credit? 58,000. What is the balance liability? Balance liability is 36,000. So out of 58,000, 36,000 I will adjust against CGST liability, make my liability 0, and the balance credit can be carried forward 22,000 to the next year. Okay, so IGST, first IGST credit should be taken, it should be made 0, and then you have to move to CGST and SGST credits. CGST and SGST credit, first adjustment is against the same liability, CGST liability and SGST liability. Balance, if any, will be either carried forward, or if there is any other IGST liability, you can use to set off the IGST liability. For example, if IGST liability is 3,80,000. So what you will do? So first 2,04,000 rupees should be adjusted against 3,80,000. Still we will have a payable in IGST. Okay. So what I will do? This 58,000 I will adjust again 60,000. Here 2,000 rupees becomes payable. This 88,000 I will adjust again 60,000. SGST 0 payable now. 0 liability is made 0. Here 2,000 rupees will become payable. Now here I'll have a balance payable. Here I'll have an ITC of 28,000 excess because 88,000 is my ITC, 60,000 is my liability. So 28,000 balance is there in my ITC. That 28,000 now we can adjust it against IGST. Okay. So that waterfall mechanism of how you have to adjust that part, you should be very thorough. Then only you will be able to solve these kind of sums. If it is a bit complicated, like a higher IGST payable, it becomes a little complicated. So you need to be thorough with the and have a thorough understanding about how you can adjust the ITC against the outward liability. Okay. So with this, we will close the class for today. And tomorrow we will continue with registration and other aspects. Any questions?
No, ma'am.
No. Okay. Okay then. Thank you.
Thank you.